Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now. The first number to know this month is $85. That's the price of a barrel of oil as of August 17th, up 25% from its midsummer low on July 6th. Now, the exact level of prices is not so important as the fact that rising prices reflect markets' growing doubts that the war in Iran and shipping through the Strait of Hormuz will return to peaceful normalcy anytime soon. And that means continued elevated uncertainty, inflation, and interest rates, which brings me to the second number to know this month, 4.7%. That was the yield that 10-year treasuries reached on August 17th, and it is within spitting distance of the highest 10-year yield since 2007. That reflects market concerns about energy prices, inflation, and the ample supplies of government debt being issued by the United States as well as other countries. And where the 10-year treasury yield goes, mortgage rates tend to follow. Here in the dog days of summer, mortgage rates are staying almost 3/4 of a point above 6%, which they touched on the eve of the war in Iran at the end of February. Now, this week also marked a watershed moment where mortgage rates are now higher than the same time a year ago, which will likely make for a headwind on home purchase demand compared to year-ago levels for the rest of the third quarter. Now, the fourth number to know, 1,126,000. That's how many active listings were on the market nationally at the end of July, according to Realtor.com. That is just above the 1.1 million active listings in July of last year. We're really 2% above the level at the end of July last year, which is actually the third month in a row that we've had that low and steady rate of growth, ever since a sharp slowdown in growth that began back in May of 2025. When inventory had been up 32% year over year. Finally, pending home sales were up only 2% year over year in July. After a few months of more like 5% growth, that might signal the start of a downshift in sales activity as buyers are growing tired of these elevated mortgage rates. So between that flat inventory growth and pretty much flat sales, this looks like a fairly balanced market between buyers and sellers for this time of year. Don't forget that late summer is usually one of the best times to buy because the level of inventory is really high, which gives folks the best chance of finding a good match. And right now, competition from other buyers is not nearly as fierce as it will likely be next spring. All right, that is all I've got for this month, and thanks as always for watching.